Hey homeowners, it is Josh Sternberg coming at you from sunny Southern California. For all my homeowners out there who have questions about reverse mortgages, I've got some, I hesitate to use the word bad, but some relatively not so good news. For those of you who need a quick primer, reverse mortgages are for people who are elderly. You have to have enough equity in your home to make it worthwhile for the bank. And if you can roll your current mortgage into a reverse mortgage, they will start paying your mortgage for you for the rest of your life. So if you're 75 years old and you live until you're 90, for those 15 years, you do not have a mortgage payment. There are lots of benefits and also negatives of a reverse mortgage. The biggest negative is that when you die, the reverse mortgage is called. So don't just think that this is all good, which means when you die, the person you leave your house to or the people you leave your house to have to pay off your mortgage rather quickly, or else they could be at risk of foreclosure. Okay, so the people who get the worst end of the stick in a reverse mortgage are oftentimes the heirs. I just wanted to make that point, but that's not what this video is about. This video is about the current state of the reverse mortgage market. So reverse mortgages, the two bad news, right? Two things that have happened that are bad news is one, rates have gone up, and two, the LTV requirements have gone up. So let's start with rates because that's really simple. I think unless you're living under a rock, you know that rates have gone up, which means mortgage rates have gone up, which means the reverse mortgage monthly payment is higher. So that eats into your equity quicker. Now you may say, well, I'm not making my reverse mortgage payment, so it doesn't matter. Partially true, but when your heirs get your house, do you want your house to have no money left? Do you want your house to have some money left, right? Most people want to have some money left to leave to their heirs. And then the second part goes to the LTV. LTV means loan to value. If it's a higher interest rate, that means they're eating into your equity at a higher clip each month. It means when you get a reverse mortgage, you have to have more equity in your home. So your LTV requirements have increased. Let's just say for ease of conversation or ease of illustration, LTV requirements were 60%, which means your mortgage could not be more than 60% of your home value. House is worth $1 million, mortgage could only be $600,000. Now the LTVs are going to be somewhere closer in the neighborhood of 50%. Home, $1 million, LTV, 50%. Okay, so what does that mean? That means if you're anywhere between 50 and 60%, you have lost out on the ability to get a reverse mortgage. That's the bad news. So reverse mortgage companies are getting tighter. And the reason is because there's uncertainty in the market. They don't know what's going to happen with real estate prices. They don't know what's going to happen with interest rates. Okay, so you have to understand that rates are up, LTVs are higher. They are related. And the bottom line is that makes it harder for the consumer to get a reverse mortgage. You still could be a good candidate for a reverse mortgage. Just know that it's made it harder. Okay. The most common candidates for reverse mortgages, remember, people with fixed income, people who want to stay in their home, people who selling for them is not their primary option, and people moving for them are not their primary option. So they're elderly, they want to stay where they live. Moving is not easy. Selling is not easy. They don't have the money to pay the mortgage and all the bills, but they have accumulated a ton of equity. Reverse mortgage could be good for you. But before you make a decision on a reverse mortgage, you have to talk to a reverse mortgage specialist, and you should speak to an attorney to make sure you're understanding all the ins and outs of what you're signing up for. Okay? I hope that helps. If you're interested, please leave some comments below or subscribe to our channel. It would be greatly appreciated. My name is Josh Sternberg from Sternberg Law Group. Thank you for taking the time to listen.